Hey, Brian Bogner and Greg Towner here with Parallel Portfolios, and we're going to take the next few minutes and talk to you about the election. We're only 2 weeks out from the election, so we want to talk about that, how it relates to the markets. It's the number one question that everyone's asking that we're getting right now, so let's go ahead and dive into this, okay? This chart shows each presidency going all the way back to Harry Truman, right? The blues are Democrats, the reds are Republicans, and it shows you what the S&P 500 did during those presidencies, okay? And as you can see, there were periods that they were up, there were periods that they were down, both blue, both red, okay? And the point that we really want to make in this chart is this, is that yes, it's important who's president, but what's more important is what is going on during that time typically has a bigger influence on the market than necessarily who's president. If you look at the 70s here, this example, you've got Nixon, Ford, and Carter that encompass that. And we had what? Hyperinflation. We had an oil embargo. We had high interest rates. We had things that had a bigger impact on what the market did than necessarily who was president, okay? And we can go through each one of these here and dissect it and look at that. And the reality is that's what we believe today, is there's forces on the market right now that are more influential in what the market is doing than necessarily who's going to get elected president here in 2 weeks. So let me go ahead and turn it over to you, Greg. Take it away.
Yeah, thanks. I mean, you're right. There's always so many factors. I mean, think about the world right now. I mean, obviously COVID and what the central banks are doing. And, from a bigger picture, we're seeing the big shift from the baby boomer generation to the millennials, and there's on and on. Of course, there'll be things to come that we not even thinking about right now. So many different factors. It's not that it's unimportant who's in office. It's just there's so many other factors that are at least as important, and probably in most cases more important.
Right.
This chart, Brian, it's a little confusing at first, but we think the message is important. We've heard from people, well, I want to wait till after the election or that sort of thing. This chart, let's look at the red line here. This is election years over history, all the way back to the 1920s. And it's looking at a calendar of each year and looking at what are the forward 3-month returns at each point in time. So that red circle there is about a month ago. We're now up in that upper part. So the forward 3-month returns are actually quite a bit above average from here in kind of the mid to late October area. So heading into the election, historically, markets actually do well looking out over the next few months, seasonality wise. In fact, they do pretty much the same in election years as they do in non-election years. So really the message to us is, stick with your longer term plan and what you would normally do in your discipline, as opposed to just trying to wait around the market. I mean, what if the market goes up a lot now? You say, oh, I can't chase it now. Or what if it goes down because the person won that you don't want to win? Now I don't want to invest in that market. So your decisions are going to keep multiplying if you stray away from your plan. One thing that we did want to talk about is, so a lot of people wonder, well, what is the market factoring in as far as the election is concerned? And you can look at the polls, you can look at the betting sites and all of that. But what we see is the market is actually factoring in a big way a Biden victory. And there's a lot of different ways we can show that, but what we're showing today is probably the most obvious one. That orange line over the last 6 months is an ETF that represents clean energy, alternative energy stocks, which Biden certainly talks up a lot as about a potential plan. And the purple is the S&P 500. So you can see that this, and if you look at other baskets of stocks that are tied to Biden, they've done exceptionally well as he's increased in the polls over the last handful of months. Now, that's not to say the market's definitely going to be right and is predicting what will for sure happen. What it means is we think the market has largely factored that in at this point. There may still be surprises in either direction. And we also think that historically, when you look in the days and weeks after elections, the market has a lot of kind of whipsaw price action volatility. So don't be surprised if that happens, but then it will eventually settle in and start to look forward as it always does. And moving away from the election a little bit and focusing in on the health of corporations. Right now there's a lot going on in the economy. Unfortunately, small businesses in a lot of ways can be suffering. Certain areas of the market are suffering. But if you look at the S&P, the larger companies, their cash balances are just going up astronomically. Now, we'd love to see them, reinvest a lot of that and push for growth. But at the bottom line is they're pretty healthy. They can get through a prolonged, slow period economically and be well positioned on the other end of it. And that's why we focus on quality. We want these companies that have high quality balance sheets that are prepared to get through difficult periods like this and not struggling just to get from week to week and month to month. Well, we're speaking of cash and liquidity, Brian. There's nothing bigger out there than the world's central banks, right? The blue is Europe, the orange is the Fed here in the US, and then the other is Japan. I mean, obviously we've seen a 10-year trend of tremendous liquidity, but now of course it's spiked up this year. A lot of nuts and bolts go into what this means, but the bottom line is it provides a liquidity to financial markets throughout the world, and all else equal, it's a positive.
Yeah. All right, so in summary, as we said here, stocks have performed well under many types of presidents. Okay, so if whoever you vote for does not get elected, it doesn't mean that all is lost in terms of the markets. All right. Historically, as we showed, there's very little benefit to wait until after election. We're only 2 weeks out right now, so if somebody wants to wait till after the election, we're usually good with it. But this intuitive thought of, well, I'm going to wait till after the election when everything settles down and everything before I do something. Again, historically, there's not a lot of data that supports that. Okay, that usually right about now, where we are today, the forward 3 months returns have been some of the best historically. All right, market is likely pricing in. We believe it's likely pricing in a Biden win. And it just goes against that intuitive thought, well, if the Democrats get in, and this is the number one thing we hear, if the Democrats get in, well, then the market's going to crash. Well, the market's going up, and we believe it's pricing in a Biden. We don't know who's going to win. We're not saying Biden's going to win or this or that. That's not the point we're trying to make, but we're just based on what we're seeing and some of the sectors and things like that and how they're performing. That's where the market seems to go. And it's been positive. Okay. And as Greg just said here a couple seconds ago, corporate balance sheets are strong. These companies are sitting on a lot of cash. Central banks are creating a lot of liquidity. There's a lot of money out there that's looking for a home. It can't sit. If it sits in cash, it does nothing, and inflation eats at it, right? So what happens to that cash? It looks for a home, and that home is typically riskier type things, right? A company's got to hire someone, do R&D, invest in capital expenditures, whatever they're going to do, right? It's going to generate economic activity, right? That money is going to get the flow into things that's going to generate economic activity. So we continue to be, look, we are bullish, okay? And we've been bullish for a while here, and so we continue to be. Yes, the next couple of weeks are going to give us some volatility. If you have any questions about anything, give us a call, shoot us an email, and thank you so much for listening.